Oil is one of the building blocks of the modern world. Without oil, the wheels of capitalism simply cannot turn. And what happens when war breaks out in places where oil is extracted? Oil prices will rise, of course, as they have many times in the past, and it is happening now too, with the growing tensions between Israel and Iran. How far can the price of black gold rise? And which three companies in the oil industry can profit from such a situation? And does it even make sense to consider investing in this sector anymore? We'll answer these questions and more in today's video. Hello, investors. This is Chris from 𝗕𝗂𝗶𝗀𝗕𝗹. None of the information in this video is an investment recommendation. Always conduct your own thorough analysis. The Middle East produces more than a third of the world's oil, and any conflict in the region usually increases market uncertainty. If Iran were to block the strategic Strait of Hormuz, through which 20% of the world's oil exports pass, oil prices could rise sharply. This could present interesting opportunities for some global oil players, especially those with operations outside the Middle East. Every major conflict in the Middle East region in the past has led to a rise in oil prices. Just look at the oil shocks of the 1970s or the attacks on Saudi oil facilities in 2019, when oil prices rose by as much as 15% in a matter of hours. Back then, between late 1973 and early 1974, the world price of oil nearly quadrupled after the United States offered financial support to Israel in the Arab-Israeli War, the Organization of Arab Petroleum. Exporting countries halted oil exports to countries including the US, the UK, Canada, and Japan. Could this happen again? The 1973 war may have pitted Israel against two oil-producing nations, Egypt and Syria, but there is no reason at present to believe that this will happen again. Oil prices could shoot up by as much as $20 a barrel if Iranian production takes a hit from the conflict, according to Goldman Sachs. U.S. oil futures rose around 5% on Thursday and rose again on Friday morning on concerns that Israel could hit Iran's oil industry in retaliation for the missile attack. It estimated that if we saw a sustained decline in Iranian production of 1 million barrels a day, then we would see a peak in oil prices around $20 a barrel next year, said Don Striven, co-head of Goldman Sachs. That's assuming the OPEC Plus oil cartel doesn't respond by increasing production elsewhere. If key OPEC Plus members such as Saudi Arabia and the United Arab Emirates make up some of their production losses, oil markets could see a small increase of a little less than $10 a barrel, he added. Shares of oil companies reacted to the events with several days of gains. The same is happening now, with the world's leading oil producers hitting highs. Up-to-date information about the conflict and fair share prices that profit from it is available to 𝗕𝗂𝗶𝗀𝗃 Black members. In addition, they have access to the fair prices of thousands more companies or a portfolio tracker with a dividend calendar. Chevron Corporation is one of the largest energy companies in the world. Today, its business is spread across several continents, including the Middle East, North America, Latin America, and Africa. Chevron focuses not only on oil production and refining, but also on alternative energy and emission reduction technologies. The company's stock rose sharply in 2021 following Russia's invasion of Ukraine. They peaked in 2022. Today, they trade around 150s per share. But as recently as last week, the price of a share was trading at 140. You can find out if that's a fair price to buy, thanks to a fair price on 𝗕𝗂𝗶𝗀𝗋. The 8.5% rise was caused by a newly emerging conflict. As oil production from the region is likely to slow, Chevron will get more contracts and money through its operations taking place in other territories. If there were a complete halt in oil production from the Middle East, the share price would react sharply, along with the price of black gold itself. On the other hand, Chevron is involved in the region, so a complete shutdown of its operations in these countries could have a negative impact, including on other companies. We'll talk about whether that could happen at the end of the video. British Petroleum is one of the major global energy companies that has been struggling in recent weeks with the impact of the geopolitical situation, particularly in the context of the conflict between Israel and Iran. This conflict has sparked fears of disruption to oil supplies, which may affect oil prices and subsequently the performance of BP shares. The company's shares have recently experienced a recent decline of approximately 14% as a result of lower than expected earnings for the most recent quarter. However, due to the impact of rising oil prices, the stock has rallied nearly 9% in the past week. Should the conflict in the region escalate, the price per barrel of oil could reach even higher levels, which would further support the company's stock gain. In the next video, we'll take a look at 3 interesting ARM stocks, and watch out. One of them is below its fair price. So subscribe and keep on notifications so you don't miss the next video. As one of the world's major oil companies, ExxonMobil cannot be missing from today's list. The stock is effectively benefiting from current events. In the wake of this conflict, they have reached record highs. On Monday, the company's stock hit an all-time high of $120 per share, boosted by a rise in oil prices above $75 per barrel. This development was due to fears of oil supply disruptions as a result of the conflict, which have not yet occurred. ExxonMobil, with its global presence and extensive production activities in the Americas and Africa, has benefited significantly from the rise in oil prices, which may further support their earnings and stock growth if geopolitical tensions continue. Now let's talk about when the oil flow was completely shut off. The complete closure of the Strait of Hormuz, through which up to 20% of the world's oil production passes, occurred in 1972. The price of a barrel of oil went up by 150% to $140. This price was only surpassed in 2008. So, if the strait were to be closed, the oil price would certainly react sensitively. Do you want to invest in companies that produce oil and profit from current world events? Check out our previous video to learn all about this conflict. Good luck with your investments.